Greetings, Algo artisans. Are the bulls back?
The bulls are back in town.
I think so. We have some data to back it up. We're going to take a look at the charts as well. We're going to do that right now. But before we get started, please like, subscribe, hit the notification bell, follow, do all that stuff. Helps us get more content out to you. So we're going to start with an article here on CoinDesk, and it's entitled Bitcoin Traders Scoop Up Options Bets at 65,000 and Higher. Without getting too deep into options, because it can be a complex subject, I want to keep it pretty simple here. We're going to talk about puts and calls and what they mean. It says here, understanding options. Options are versatile financial products. These contracts involve a buyer and a seller, where the buyer pays a premium for the rights granted by the contract. Call options allow the holder to buy the asset at a stated price within a specific time frame. Put options, on the other hand, allow the holder to sell the asset at a stated price within a specific time frame. Each call option has a bullish buyer and a bearish seller, while put options have a bearish buyer and a bullish seller. Okay, so let's break this down just a little bit. If you are buying a call option, you're bullish, because what you're doing is, it says here, call options allow the holder to buy the asset at a stated price within a specific time frame, right? So put options allow the holder to sell the asset at a stated price within a specific time frame. Okay, so right now, calls are in play, and calls are predicting the price, according to this article, at $65,000 to $75,000. It says here, many calls at $65,000, $70,000, and $75,000 crossed the tape on dominant crypto options exchange Deribit over the weekend. The concentration of activity in these so-called out-of-the-money calls reflects bullish market sentiment. We don't want to get too much farther into calls because I don't want to confuse the audience. It's a complex subject, and it's really for more sophisticated investors. What really matters is that calls are bullish, and this is the number that they're looking at within a 3 or 4 month period, a lot of them. And by the way, calls tend to be a reliable indicator of where the market is going, because puts and calls and options in general, they are usually bought and sold by more sophisticated investors who have stronger instruments as far as what might happen to crypto or anything else. And they also tend to have knowledge. They tend to be the smart money. So that's why people kind of pay attention to the options market. And in this case, it says here, crypto traders are snapping cheap out of the money Bitcoin calls or bullish options bets at levels around the cryptocurrency's lifetime high of about $69,000. And that does make a lot of sense. Crypto is going to go up, but as it hits the all-time high, it could reject. So a lot of people are bullish, but they don't want to take too many bets past the all-time high. Here it says, over the weekend, many call options at strikes of 65, 70, and 75,000 changed hands on Deribit, the world's leading crypto options exchange by volumes and open interest. On Deribit, one options contract represents one Bitcoin. Again, like we said before, call options give investors the right to buy the underlying asset at a specific price by a stated date, while puts confer the right to sell. Call buyers implicitly bullish on the market. We covered that already, but it doesn't hurt to hear it again. I'm going to move forward here. We see a concentration of open interest at $50,000 calls, and have seen flows in $50,000, $60,000, and $75,000 calls in the listed options markets from April to June maturities. What that means, all that gobbledygook that we just said, the maturity is when the, we'll call it the bet, if you will, when that ends. These prices matter from April to June depending on which option. If you have an option that expires in April, then the price of Bitcoin is going to be important in evaluating this call in April. If it expires in June or May, that's when this matters. It says here, these flows demonstrate conviction from buyers willing to pay a premium to take on these positions, suggesting investors have a constructive view on Bitcoin. To basically say here, positioning in the options market has been a reliable indicator of impending price swings. That's what's key here. So if you look back at the data, options does kind of give us an idea of what's going on. It does say that the recent bullish flows are reminiscent of the 2020 to 2021 bull market, when sophisticated market participants consistently bought calls at strikes at $80,000 and higher at cheap valuation, right? So they were able to buy those without paying very much premium, but they did think the price was going to go that high, and it almost got there. It went to 69,000. So, and then it just kind of goes over what's been going on. So in the end, we do have a reliable indicator for price being bullish. On top of that, we have some more data from the Gorilla. Okay, so V the Gorilla has given us a little bit more data in the private live lab, and he did it last week, and he does that every Thursday. And his data has been correct over time quite a bit. We've gone over this even in the live shows recently, and so I want to take a look at the charts here. And if you can excuse the gobbledygook you see on the screen here, we'll make this make a little bit more sense right now. So what I've done here is I've marked out where a lot of the liquidity is, right? These yellow boxes, and we're looking at the daily chart, and that means that we're looking at each one of these candles being a day's worth of price action. Now, this level already got grabbed, so I had predicted the price would come down where this top yellow box is. I had predicted that earlier, and price went down to that already. So had I not been, say, doing a show, I could have gone short and made that money. And sometimes I'll actually do that on the shows. I will go short, but that has already happened. Now, we do have more liquidity, a little bit lower, at least we did at the time, and that was less than an hour ago. So that we were at 47,300 all the way up to about 47,600. There was more liquidity, and we get that off the Kingfisher.io. And if you've been watching this channel, you have seen me do that, and you can go to the description to get a referral link to the Kingfisher.io. It's a great website. Now, price may likely head down and grab some liquidity in the high 40s, and then again, it may not, right? So if we look at the price action, there is liquidity that just got grabbed. It's at the top of this prior price action. So I'm going to go ahead and draw a box around it so we can visualize where a lot of the price action happened in the past, which was right here. And I'm going to color that box differently because this is not a liquidity read. This is just merely a bunch of price action, okay? So these are called order blocks. Where those occur is where we'll also see liquidity very commonly, right? Because a lot of trading happened in this area. So because a lot of trading happened before, it'll probably happen again. That's just human nature, if you will. It's also financial nature. And we also have a fair amount of liquidity below that. Now, with that much liquidity, if the charts favor a move down, then there is a decent chance price may go down to grab that in the low 40s or even the high 40s. However, price may not do that, right? Price may just continue upward. It is quite possible. However, it is rather extended, going from early February, the 5th of February, all the way until today, which is the 12th. So this last week or so has been a pretty strong move up. And if we were to simply map this out with a Fibonacci tool, we would see, if you were to treat this as one impulse, as one big move up, then price would want to head down to like 45,000-ish, right? However, if we were to actually view this as a larger move going back to late January, then we would actually see a possible 618 right around where this liquidity is at 43 to 44,000. However, in order for price to come down to this area, the charts do have to favor a move down. And the question is right now, do the charts favor a move down? And as of now, on the weekly time frame, price does not favor a move down. The monthly is bullish, the weekly is bullish, price wants to go up on those. Daily is in an area right now, and if you're at Algo Factory, you're going to know what I'm looking at here on the bottom. This is the bottom. I use about a quarter of this information. I don't use all that, but I'm looking at a metric right now that really could go either way on the daily. It really could push down or continue up. Because the charts are in a bit of a limbo, we can expect price to just kind of hang out where it is until a quote-unquote decision is made. That puts me in the category of thinking that price may consolidate in this area right here from, say, 48 to 50. It might bounce around in there. This area could be a little different than this, but this is kind of what I'm looking at right now. And as price action unfolds, as the technical market unfolds, right, we might see exactly where any kind of consolidation occurs. But right now, it does look as if it's going to kind of bounce back and forth just a little bit. It might be more than a little bit. We're going to see what happens. And then whichever way it breaks out of that will probably be which way it goes. However, that consolidation is not defined yet. I have not seen enough price action to say it's definitely consolidating. I'm just seeing enough price action to say it could consolidate. It's quite likely. So for the meantime, after today's CPI announcement and the way that all of the markets kind of moved, they got pushed down a little bit. We're going to have to wait for that price action to clear up. But on a higher time frame, on a much higher time frame, I will give some predictions right now, and we're going to look on the weekly. I'm going to do a big giant fib. I'm going to use a Fibonacci tool. I'm going to treat this as one large move up here until there. And those targets right now, if price were to just simply pop up, I would expect targets to go to about 54,000, right? Around 54, and then around 61, 62,000. And that could easily happen by April, May, any of those times, which really does reflect what happened over in the options market. So, of course, we have the all-time highs going back here into 2022, but it would not surprise me at all to see price head up to this kind of 61, 62,000 area in the next 3 or 4 months. It just really depends on how bullish things are getting on the way to the halving. And I think really well within reach is 53,000, and there is some liquidity up at that 53,000 area. So 53,000 and 61 to 62,000 are very realistic in the next few months. That is my forecast. Doesn't mean it's going to happen. Anything Anything can happen, especially if traditional finance takes a hard hit. If TradFi takes a hit, everything goes down. In the meantime, that's my look on Bitcoin. I hope this helps you. I hope it was educational. If you have any questions, you can ask in the comments section. And also, please go ahead over to algofactory.tech. That's algofactory.tech. You can come over. We'll teach you how we do all these things. All these measurements you see on the screen, they're not that complex. I know it looks complex, but it's actually not hard at all. It just takes a little bit of time to learn. This is not a get-rich-quick scheme, but it also isn't that hard to do. Come on over. We'll show you what's going on. And for the meantime, go ahead and trade your job. Upgrade your life. See you on the next one. All right, hope you enjoyed the show. Please like, subscribe, hit that notification bell. On the screen there, you can see our website, algofactory.tech. Tap that QR code to take you straight there. I'm also very active on X. That's algo_factory777. We got TikTok and Rumble. In the meantime, we hope to see you over at the website. Come on over, trade your job, upgrade your life. We'll see you there.